Don't you just love it when something works out for you? You put out a video, recommend a stock, and because someone else like the Motley Fool only recommends it in his paid subscription service, you have recommended it before anyone else, and then it jumps up in a week 55%. For those of you who only watched the first couple of minutes of my videos, you may have missed it, but I recommended, well, not recommendations because I'm not a financial advisor, I spoke about Fubo TV when it was $31 a share. Well, I spoke about it when it was $30 a share. I went in when it was $31 a share. Now, I said I liked it. It was a small streaming company, low float, wouldn't take much to move it. Main thing was its price to sales was $2 less than Netflix, and Netflix has spent ages getting its price to sales down to a minimum. That was kind of its big thing. Now, to be $2 less than such a small company, no. And here we're going to see what Motley Fool has been saying about it. Okay, he's saying how, so I'm a bit out of breath, I've just been up and down the stairs. It seems to be happening regularly late. That the CEO was on Voices of Wall Street podcast. That's going to lift it a little bit. He spoke about possibility of sporting events exclusive to Fubo TV, and he said everything is always on the table. Apparently also still talking about acquiring a betting company, sports betting company, although that isn't in here. Now, I think there's a lot of people still asleep on this stock, so it could rise more in the long term. However, I will be waiting for a dip. The dip may never come, but I have pulled out my initial investment and been left with 2 shares and a bit of profit. With it being a red day, I figured, why not? The 2 shares, although 2 shares is nothing, it's gonna, it's gonna give me $100 in it. It allows me to keep track of the company, and it does become a success. 2 shares is 2 shares, and I pulled out my initial investment. The shares are risk free. I made a little bit of profit, which I moved into other companies that I strongly believe in as well, that are undervalued since everything's gone down. Now, why is it red day? Stimulus has come out, and if you want to know more about stimulus, I suggest following Meet Kevin. He's well on the ball with stimulus during this period. That's why I've only given out tidbits. I haven't bothered following it so much this time round. You have the banks have been stress tested, and they have come out being allowed to do share buybacks. I would still do your own due diligence and go for banks which you think are good, like say JP Morgan Chase, Huntington. There's a number of banks that will be good. don't rely on their stress tests alone. Do your own due diligence to find out the best ones. Now, we do have a few other things to speak about, and one of them, oh, what am I doing? I spoke before about it. I've been making up more pies. Now, some of them are in the description below, not all of them, but you can see there, I've only just started because I'm doing auto invest. Have to wait for it to start pumping the money in. Now, this one, the $1 billion portfolio, you have to realise that it's sorry, it's not 1 billion, it's 101 billion. Now, don't get fooled by this. It is 212 taking previous 5 years growth and thinking if it continues that growth for the next 10 years, this is what it will turn out as. Now, of course, these companies are not going to continue with the same amount of growth constantly, but it would be nice. However, there's 4 companies in there, just to give you a taste of what it is. Now, my hypergrowth, which is supposed to give 5 to 7 million, has a massive amount of companies in there. But this is the funny thing. Slack, I believe, is undervalued because it's currently $3 billion less than what Salesforce has already said is going to pay for it. Salesforce, I said when it's 220, you should scoop it up. Zoom. The market's down because COVID cases are on the rise, and the UK apparently has a mutated version. Now, what I'm going to say next, that the vaccine doesn't work because of the mutation. Maybe, maybe not. However, we're going to move on to the next thing. Tritteras. You may remember this from my video about Netfin acquisition. It's a SPAC that's gone through and it's dropped a massive amount in the space of a few days. Why? Because one of the companies that it supplies is that's 10% of its revenue has been hit with an order to pay up in funds. Tritteras has come out and said there's no issue because they will pay them the money it owes them. They have that guarantee, but even so, when you think not long ago this company was 26% of their revenue, now it's only 10%, and you know, so in a year's time it will probably only be 5% of their revenue. Now, this was called before the acquisition the Amazon of blockchain, and all sorts of things were checked out, and I think the reason it didn't go higher as a SPAC was people didn't understand it. I'm glad I sold it. I didn't sell it at high, but I sold it at $13 because I wanted to move the money into something else. because look what happened. Well, I am considering going into it now. You know, even if that 10% revenue doesn't come in, it's still worth it. You know, because it's not like 40% of revenue is missing, and I think it is one of the most undervalued ones post SPAC. Well, it's not the most undervalued. I could name a few. You've got Hylian, Tattoo Chef, Multiplane, and this, but I'm talking about in the short term. Now, I'd like to know your guys' opinion. Don't forget to hit the like button and comment in the box below. Check out links in the description below if you're looking for a free trading platform. I'll see you in the next video.